Bikaji Foods makes fresh investment in US business, a global growth signal. Bikaji Foods has announced another strategic investment in its wholly owned US subsidiary, Bikaji Foods International USA Corp. Although the transaction may appear small compared to the company's overall size, it reflects management's continued focus on strengthening its international presence. The company subscribed to an additional 290,000 common shares of Bikaji USA at a face value of $10 each. This resulted in a fresh capital infusion of $2.9 million into the wholly owned subsidiary. Importantly, there is no change in Bikaji Foods' ownership percentage after this investment. Since the subsidiary is already wholly owned, the transaction is purely an internal capital allocation exercise. Such investments are common when a parent company wants to provide additional funding for business expansion. Fresh capital can be used for working capital, inventory, distribution, marketing, or future growth initiatives. For investors, the key takeaway is not the amount invested but the strategic direction behind it. Continued investment in overseas subsidiaries generally indicates that management sees long-term growth opportunities in international markets. Bikaji has gradually transformed itself from a regional snack manufacturer into a national and increasingly global food brand. The company has been expanding its footprint across multiple international markets where demand for Indian packaged foods continues to grow. The United States represents one of the largest overseas markets for Indian food products. A growing Indian diaspora, increasing popularity of ethnic cuisines, and expanding retail distribution have created significant opportunities for packaged food companies. Demand is no longer limited to Indian consumers alone. Many international consumers are increasingly exploring authentic Indian snacks, sweets, and ready-to-eat products. Having a dedicated US subsidiary allows Bikaji to strengthen its presence in one of the world's largest consumer markets. Local operations can improve supply chain management, customer service, and distribution efficiency. A stronger local entity can also help the company build relationships with supermarkets, wholesalers, and large retail chains. This becomes increasingly important as competition in the packaged food industry continues to rise. Another advantage of maintaining an overseas subsidiary is better operational flexibility. It allows faster decision-making while supporting regional marketing and product customization based on local consumer preferences. Many Indian FMCG companies have adopted similar strategies while expanding globally. Rather than managing exports entirely from India, companies increasingly establish local subsidiaries to build stronger market presence. For Bikaji, exports remain an important pillar of future growth. The domestic market continues to offer attractive opportunities, but international expansion provides an additional avenue for long-term revenue diversification. Diversification across geographies can also reduce dependence on a single market. If demand slows in one region, growth from international markets can help balance overall business performance. Investors should also note that this transaction does not involve any acquisition or dilution. Since the company continues to own 100% of the subsidiary, shareholders' ownership remains completely unchanged. From an accounting perspective, the transaction simply represents additional capital invested into an existing subsidiary. Therefore, investors should not expect any immediate impact on earnings solely because of this announcement. The real value of this investment will depend on how effectively Bikaji USA utilizes the additional capital. Future sales growth, distribution expansion and market penetration will ultimately determine the return on investment. The packaged foods industry remains highly competitive globally. Established multinational brands and several Indian companies are actively expanding their presence in overseas markets. Success in international markets requires strong product quality, efficient logistics, competitive pricing and continuous brand building. Additional capital can support these objectives over the long term. Bikaji has already built a strong reputation in categories such as bhujia, namkeen, sweets and traditional Indian snacks. Leveraging these strengths internationally could help the company expand its customer base further. Another positive aspect is management's willingness to invest proactively instead of waiting for capacity constraints. Timely investments often allow companies to capitalize on growth opportunities more effectively. However, investors should also remain realistic about the immediate financial impact. A capital infusion into a subsidiary does not automatically translate into higher revenues or profits in the short term. The success of this strategy will depend on execution over the coming years. Expansion of distribution networks, product acceptance and improving international sales will be important metrics to monitor. Investors should also watch future quarterly results for updates on export growth. Management commentary regarding overseas business performance could provide better insight into the effectiveness of this investment. As Indian packaged food brands continue gaining global recognition, companies with established international operations may enjoy stronger long-term growth opportunities. Bikaji appears to be positioning itself to benefit from this trend. Overall, the additional investment in Bikaji Foods International USA Corp reflects a strategic commitment towards global expansion rather than a short-term financial event. While the transaction itself may not immediately impact earnings, it reinforces management's confidence in building a stronger international business over the long term.